Okay, we'll start here in about 1 minute or so. Oh, I need to turn that off. Hang on. Okay, there we go. And today's a pretty, I'm excited today. Why? Because my son, his name is Joey, he is boarding a plane right now, coming out to see me. He lives in Virginia. I live in California. He's never been here. And so he'll be arriving here in a few hours. So I'm pumped and excited. I'm also pumped and excited about this webinar today. It's the first webinar out of, I think, 9 webinars we're going to be doing from now until the end of the year. And we're going to be doing them on various strategies, possibly some software, things like that. And we're just going to hop right into it now. So welcome, guys. Let me go ahead and start this slideshow. Here we go. Today's webinar is on how to find 90% win rates on Cantor Exchange. Let's go ahead and get the disclaimer out of the way. The risk of loss trading any financial instrument, such as Forex or binary options, can be substantial. You must be aware and willing to accept those risks in order to invest. Don't trade with money you can't afford to lose. This is neither a solicitation nor an offer to buy or sell any financial interest. No representation is being made that any account is likely to achieve profits or losses similar to the ones discussed here. Past performance is not indicative of future results. Any strategies discussed are for educational purposes only and are not to be construed as specific trading advice. This material is for educational purposes only. TraderBot Marketplace is not affiliated with Cantor Exchange. Hey guys, I'm Ryan. I run TraderBot Marketplace, so check us out. If you don't know anything about us while we're going through the material here, you can ask any questions in the chat box that we have provided for you. Okay, first things first. What do you think peppers have to do with this presentation? I'm talking about this picture that I posted yesterday. Well, here's the thing. Peppers are all great. You know, they're hot, they're yummy, they're pretty. However, they will burn you if you eat too many too fast. Likewise, when looking for 90% win rates with digital options, some people call them binary options, the rewards can be amazing, but the consequences can be really bad as well. Just keep that in mind. If you eat too many peppers all at once, you're going to get burned. If you take too many what's called quote unquote ITM or in the money trades all at once, you're going to get burned. So we're going to talk about how to get around that. Okay, so let's take a look. Today, we're going to be covering a few different things. We're going to be talking about picking the proper ITM level, which is in the money, buying less than the probabilities suggest, and a general probability tool suite overview. Now this probability tool suite overview was something that, let me see if he's in here. Matthew, are you still in here? Matthew Renner. Matthew Renner and I have been working on this thing for several years, and we came up with a pretty nifty tool. Now it's called the probability tool suite. It's a third-party application that allows you to see trades with more knowledge than you could than you could ever see without this tool. Now, just a note here, Cantor Exchange offers participants the opportunity to connect with the exchange via a fixed connection for third-party applications. And that's something that Nadex has been hesitant to allow so far. So I like the fact that Cantor Exchange is allowing people to connect. I don't know all the technicalities about it, so don't ask me. Go talk to Cantor Exchange. We're not connected right yet, but we are looking into it. Okay, with our software, you can know how often an asset wins or loses before you ever place a trade. If you look right here in this area, you can see kind of what it looks like. I don't expect you to know how to read it right now. Don't worry about it. That's for future reference. Okay, so here's what we're going to be looking at. We're just going to take a simple RSI. Yes, the strikes, Matthew, I'll get to that in a minute. Okay, we're just going to look at a simple RSI on a 5-minute chart with a 2-hour expiry. Let's just pretend it's a 2-hour expiry. A 14-period look back and an overbought and oversold level of 70-30, just the normal RSI. Now, if you're looking on the Cantor Exchange platform, And I'm going to be talking about this trade because this is actually a trade that I took a couple of days ago. So if you're looking on here, you can see that the RSI went up above the overbought area right here. The arrow's pointing right to it. And you can also see that price was really moving, and it punched way up, you know, several hours or several bars after the RSI went up above overbought. So again, I took that trade, but let me ask you this. How often, if I wanted to take that trade, if I wanted to buy every time the RSI got up above 70, how often does it win? Do you know right off the bat, how often does that win? Well, we don't. The only way that we know how often it wins is to go back in the charts and look at every single one. And I used to do this, and most traders do. And I got sick of it, so I went to Matthew and I said, hey, let's write a program to do this for us. And that's exactly what we did. Now let's add the probability tool suite. Now what you're seeing is the same exact price here, the candlesticks, same exact ones. It looks a little, just a hair different, but it's the same exact ones right here. On the probability tool suite over here, however, I can know things like, I know that if I wanted to take this trade, let's say ITM or whatever, actually I got this in reverse right here. This arrow, I was buying this, not selling it. So this is messed up, don't worry about it. But I know that there's several different strikes that I can take, and there's several different expiries that I can choose from. And I can look over here, and we'll do this live here in a few minutes. I can look over here and I can see exactly what the probabilities are over X number of trades, the past 100 trades, the past 50 trades, the past 1,000 trades. It doesn't matter. I can look on there and I can know, for example, this signal right here wins, I don't know, 72% of the time over the past 100 trades. That gives me information I can use. If I don't use the tool suite, then it takes forever. It takes like a day to come up with all those statistics. Okay, let's move on, and I'll talk about it more here in a minute. So here's the cool part. Since I only use the tool suite for my own trading, what type of returns am I getting? Well, since June the 1st, 2017, which is about 5 months ago, I've gained about 6 to 7% in my account trading onesie twosies. Do you know what onesie twosies are? Those are, Peter, I'll get to that in a second. Hang on. Onesie twosies are, you know, trading a contract here, 2 contracts there, you know, just little small contracts based upon my account size. Now, my account at Cantor Exchange, I don't know, $1,300 or whatever. And what I'm trying to do is trying to beat the S&P benchmark average. Now, 6 to 7% over 5 months equals about 14 to 16% a year, which beats the annual average return of the S&P 500, which is about 10% over the past 90 years. Now, they're up a lot this year. They really are, the S&P 500. However, what I'm looking to do is to beat that every year. And these tools allow me to do that. The method works, and you're just going to see like the tip of the iceberg today. So let's hop right in. Let me get out of this and go to the charts. Let me close it. Oh, where's my charts? Let me pull them up here. I need to log into Cantor Exchange. Here we are. There's Cantor Exchange. Okay, we're going to be looking at the, let's say, the Euro USD. Now let's pull up the what's called the tool suite here. Now we're going to scroll all the way to the end. This is an MT4 platform. It's a different trading platform than Cantor Exchange has. However, this is just demo. I don't have this in a live version except for my Forex trading. I use Oanda for that. But this is just a demo. And all it does, it shows me probabilities on what is likely to happen if I look at whatever. So we're looking at the Euro USD. Right now on Cantor Exchange, I can see that price is falling. I can see all my strikes right here. If I wanted to add, let's say an RSI, let me add the RSI on here, RSI. There we go. There's an RSI, 14-period RSI, just a normal RSI. Let me make it to where you can see it a little bit better. Oh, let me go there and there. Okay. So here's your RSI. Well, Now it is, it went down below the oversold area on the RSI, and it started doing that right around this candle right here. Now, if I wanted to sell that down there, and the reason I'm saying sell on oversold and buy on overbought is because I know the statistics behind it, okay? There's certain times that you don't want to do that, such as when it's in a range, but let's just look at it for a second. If price falls below the oversold area, how often does that trade win or lose? I mean, are we looking at this one expiry, like this 5-minute expiry here? Let me go to a 5-minute chart. Are we looking at like a 5-minute expiry? Are we looking at an hour expiry, 2-hour expiry? What are we looking at? So, since I don't know that, what I'm going to do, I'm going to open up my tool suite. I'm going to go to Euro USD. I'm going to put in, let's say RSI. Well, it's already on RSI right here. And I need to just go down here and check my parameters. It's on a 14-period RSI with an overbought of 70 and oversold of 30. And we're looking to take a trade, you know, as it crosses into an overbought area, or as it goes up above 70 or down below 30. That's what we're looking to do. So whenever we look at that, let's look at the statistics. I want to find out. These are on 2-hour trades or a 2-hour window. I know Cantor Exchange closes at 4 o'clock, so let me put that on a 1-hour time frame. Where am I at? So now I want to look at a 1-hour time frame here, and I want to find out if I go with the rules, how often am I likely to win or lose this trade? Okay, now if I look at this, I'm looking at Cantor Exchange strikes, which are 5 pips wide. Each one of these lines represents a strike. Let me pull it over here. You can see right here, there's a strike at, there's a strike here at 116.55. Well, there's a strike over here at 116.55, which is right here. This is a strike that coincides with this strike here on Cantor Exchange. The next strike above is the next strike above on Cantor Exchange, and so forth. Every strike is 5 pips wide. You can make it whatever you want, but you can adjust it for anything. Now, Matthew, yes, you can adjust the time to end at 1600. I understand that. Okay, so if I'm looking at this and I'm taking a trade, let's say an hour out, what are my probabilities that that trade's going to play off? Well, right here it shows that if I had taken that ITM trade, I have a 49% probability of it paying off. So let me ask you this. If I only have a 49% probability of something winning, and I can buy it or sell it, risking, say, 60, am I going to do that? No, I'm not going to do that at all. Why? Because the probabilities are lower than the price that I want to pay. For instance, if my probabilities are 50%, I don't want to pay any more than 50% for that trade. If I do, then in the long run, I'm just shooting myself in the foot. If the probabilities are, say, you know, 90%, and I can buy it for $50 or 50 cents, whatever, then I'm going to do that because I know that 90% of the time it's going to pay off. If my probabilities show that I only have a 10% probability of winning the trade, and I can buy it at 50, am I going to do that? Yes and no. I will if I'm buying, let's say, well, not 50, but I will if I'm buying an out of the money for, you know, less than 50, or if I'm doing something called stacking my trade, which we'll talk about next week. But right here, as this stands, there's no way that I want to trade this because it's only got a 49% probability right here. However, as the contract goes along, if price pulls back up into, you know, these areas up here, or if price on this chart were to pull back up here, and you can also see it on Cantor Exchange, if price pulls up here, you know what strikes have a probability of winning. For instance, I know that this last strike, which is most likely not going to hit, however, but I know this last strike has a 98% probability of price expiring below there. Can I get into that trade? Most likely not. The only way that I can get into a strike up here with a 98% probability of price expiring below here is if price pulls way back. So let's go for a more realistic example. I've got a 95% probability of price closing below this line right here within an hour. Can I get into that trade? Well, it may or may not have been possible right around here. Right around when the price pulled back. Hang on, let me take a picture. When this price was right here, could I sell a contract here about, that was about, let's see, about 7 pips up or whatever. Could I do that? I don't know, but let's look right now and see what this shows. This is a live example right here, and the expiry is at 4 p.m. So let's look and see what happens. I know that on this strike right here, I've got a 49% probability. The next strike up is 77%. However, let's see, what is this strike? 116.20. I mean, oh, sorry, 116.60. Okay, I don't have any strikes available up here. There's no strikes available. I know that price has a 77% probability of closing below this area right here. So if price pulls back, am I going to take that trade? Most likely. That's not the only thing that I'm looking for, though. Okay, look, I want to show you a few key characteristics on how to gauge your trade. And again, this is an overview. I know you might be a little in the dark here, but let's look. When you're looking at probabilities, you also have to look at how many bars or how many signals it's looking at. Well, I know that this one right here is looking at the past 63 trades. What this means is each one of these little areas, this is one, this is one, this is one, it's looking back 63 of these. And you can go back, and it's only at certain times during the day that it's looking at them. There was no trade yesterday, the day before there was that trade, and so forth. Okay, so we're looking back 63 trades. Now, if you're looking at something and it has like a, 100% probability of winning, but it's only looking at the past 2 signals, well, that's crap. You can't do that. You have to have some type of substance. You have to be able to look back over a series of trades, not the past 2 trades, not the past 5. 25 minimum, 50 is optimal. Anything above 50 is great. 63 is fine, but that will show you how many trades it's looking at. It will also show you how many consecutive, and remember that word, consecutive wins or losses it has had in a row. For instance, let's say that we got a signal here and this signal won. And then this signal won. Well, that's 2 signals in a row, so that would be a number 2. So if we're looking here at this strike right here, which is, that's a very bad strike. I'm just using it as an example. If we look here, we can see it's had, over the past 63 trades, it's had 4 winners in a row and 6 losers in a row. And as you go up each strike, the next one has had 18 winners in a row and 4 losers in a row, maximum. The next strike up has had 31 winners in a row and 1 loser in a row. However, you cannot get into every trade when you're taking deep in the money contracts. If you're taking deep in the money contracts, it is best to look farther out. You can get the contracts for a better deal whenever you're doing that. But you also want to look at the maximum consecutive loser. You don't want these things to be up here like 19 and 21. This right here is what's called OTM, and we will talk about that next week. This week, we're just talking about ITM, okay? You want your maximum consecutive losers to be really low, and here's why. I'm going to touch on a touchy subject right now that we're not supposed to talk about in trading. Okay, but when you go into a casino and you go up to a roulette table and you see all the you see the people spinning the ball around. Well, if it lands on black, you're a winner. Lands on red, you're a loser, whatever. But the casino has an edge, and that that ball has no memory, okay? However, in trading, people do have a memory. We do things over and over and over. We're human beings. So whenever we're looking at probabilities in trading, it's not the same as looking at them in a casino. That was one thing I wanted to touch at because, again, the ball has no memory, but people do have a memory. So, you know, we do things over and over. Okay, so let's look at an example on how to look to see if we can get a better probability. Well, I've got 4 charts down here. I'm going to look at another one. Okay, on this chart right here, let me make sure I've got everything correct here. Okay, we're looking at an indicator called bar run. It's one of the most simple indicators out there. We're looking at a 20-minute expiry. Now, if you're looking at this, you can always keep 2 windows open. You can keep the tool suite open for signals or whatever, and you can keep the Cantor Exchange platform open to trade on. Now, with this signal right here, these strikes are, how far apart are they? They are 5 pips apart, which coincides with the exact strikes on Cantor Exchange over here. They're 5 pips apart. These are 20-minute expiries. Now I know that if I take the closest in the money strike, as soon as I get a signal, that closest in the money strike, price expires with inside that ITM strike 84% of the time. I know that, and it's done it over the past 52 times. It's, you know, 52 times that it's looked at the signal. You can look back longer. However, the more data you have, the slower it's going to slow down your system. So, and it's got an 84% win rate. It has a 14 consecutive winners in a row over the 52 periods or 52 trades. And it's got a maximum of 2 losers in a row. Is everybody following me so far, or are you just totally lost? I need to know because I need to know which direction I'm going to go. If you are somewhat following me, let me know. If you're totally lost, please let me know that as well. I'm going to take a sip of my coffee until I hear from somebody. Okay, cool, Kurt. Okay, I've got a full video series on this thing. However, I'm just trying to touch it right now. The basic thing I'm trying to show you is this. If you don't know your the percentage of time that your signal pays off or loses, then you're just throwing darts at a wall. Regardless of if you know how to read this or not, what you do need to know how to do is you need to know, let's say if we're taking this RSI signal, every time that price gets below here, you know, how often does it win? How often does it lose? Where does it close? Where does it touch? How many expiries can I choose from? What's the probability of it closing if I choose a 1 p.m. expiry versus a 2 p.m. expiry versus a 20-minute expiry? You know, you need to know these things, and you can. There's several ways to do it. Number one, you can go back through the charts here. Let's say on Cantor Exchange, you can go back through the charts. You can look right here, and as price closed, you can look and say, okay, did this close up or down? Well, it closed down. You can look right here. Did this close up or down? It closed down. Did this close up or down? It closed down. Did this close up or down? I don't know. Up, down, I don't know which bar it is, but you could go back and do that, and you can do it over and over and over, you know, all day long until you come up with a set of statistics that you can talk to yourself about and know, you know, what you want to do in your trading. Or you can use something similar to the tool suite. Now, what I'm going to do here, I'm going to fast forward here. Let me see. We had a signal here. Let me open it up here. Okay. We had a signal earlier. This was also on a 20-minute chart. Now, this one here, did this signal right here, which this is the bar that it closed on, did it finish profitable or not? Well, it did, because this line here coincides with this strike here, which is the closest available strike that you can find, because these are 5 pips apart. All Cantor Exchange strikes are 5 pips apart. So this closed profitable. Now, at what price can you get into this trade? Well, these always open on the open of the bar. Open of the bar. So whenever this came out, let me check it real quick. Just I don't know. This is on what's called a bar run, which is very simple. It just counts the bars. I'm just checking it right now. Okay, it's got a 4-bar run. So what it did, it counted the bars. 1, 2, goodness, hang on. I need to unclick that box. It counted 1, 2, 3, 4, and on the open of this candle right here, it spit out the signal. Now, can you get in on, the next available strike? Hang on, let me look. We're gonna look about 20 minutes out. Well, about 15 minutes out. Let's see if we can get in. Well, price right now is at 116.52. The next available strike up currently has a sale price at 24. So there's 14 minutes left in the contract. So yes, you can get in on the next available ITM strike. And I know that this one wins 84% of the time. And again, it's got 14 consecutive winners, 2 consecutive losers. So let's just go and see what that looks like. So that one was a winner. Let's back up here, and we want to look at all of the past signals. Let me do this. Okay, now let's look at this signal. Was it a winner or a loser? Well, it was a winner. It closed below. There's a down arrow here. It closed below the closest available strike. And then I'll just scroll back through here. Was this one a winner or a loser? Well, it was a winner. And this is the one that I took my trade off of on Tuesday. I think I took 4 trades on Tuesday. This was a winner as well. So we can scroll back and let's see. Okay, this one was winner as well. So you can just scroll back and see all that. Now, what you need to watch out for, there's a big, huge problem in the trading world, and this is why. If you ever see an indicator that shows, I don't care what you're using it for, Cantor Exchange, Forex, futures, whatever. If you see an indicator on there that looks great on YouTube or whatever, and then you install it and you're like, what? This is not anything like the video. What that is, that's a repainting indicator. And you want to avoid those. Now, there is a secret that nobody knows about. Well, some people do. There's a reason why RSI and stochastics and everything don't work as, I know, Matthew, please don't kill me because I'm getting ready to tell people why they don't work. They don't work because they're not using something called a bar shift. When the RSI, when you see an RSI or any indicator out there, this is what you're going to see in the live market. Well, this is what you're going to see in the historical market. What you're going to see is price coming up above here, then price coming down here, and you're going to be like, well, if I bought that, when price was here, whatever. But guess what? What you don't see is during the live market, price fluctuates up, down. All you're going to see is a close price. That's it. So when price jumps down here and new traders are like, oh, it's down below there, I want to buy it. Guess what? Price either continues to fall way down here or it comes up a little bit. We don't know because the indicator is fluctuating in the live market. The only way to get around that is to do something called a bar shift, which I'm not going to get into, but it locks it. It locks the indicator where it will not spit out a signal. Hang on. Yeah, it's not permanent. Thank you, Matthew. It's not permanent. What we've done is we have not allowed our tools to spit out signals until that bar closes. And it's over and done with, and it's locked into the history vault from now till, you know, the end of time. That signal cannot change. There's no way possible for it to change. It does not repaint. So just be aware of that. Okay, now I talked about, well, how do you get a 90% win rate? Well, to get a 90% win rate, I don't care what you see out there. There it is, and I will put money on this. It is impossible to have a 90% win rate with an at the money binary over the long term. It does not happen. If it does, you're never going to tell anybody, and that's just the way it is. So to get a 90% win rate, you're going to have to risk a little bit more. You don't always have to risk a whole lot, but if you look on the strikes here, if you know, if I'm going to buy something over here and I'm going to buy it for 17, well, what is my risk? My risk is, you know, $17. I cannot get a 90% win rate up there. It's impossible. However, if I'm going with the next strike down, which is at 94, can I get a 90% win rate on an in the money trade? Of course. You can do that all day long. But something you also need to know is how often does it lose and how many times in a row does it lose? If you know how many times in a row it loses and say over the past 100 trades it's lost a maximum of 3 times in a row, consecutive losses, you know, and then it's lost 3 times, you can look at that trade and it's not 100% that it's going to pay off just because it's lost 3 times in a row, but the probabilities are higher because not only are you looking at your screen, but so are a million other traders, and maybe they're not using the same tool that you're using, but maybe they're using their own analytical software, but they're seeing their own statistics. And everybody, all these traders that see all these statistics, their main job is to take money out of everybody else's pocket. So everybody's got their own tools. This works for me. I know that I've got an 84% win rate right here. So if price gets up close to that strike, if whatever, I'm looking to take that trade. If price continues to go up into this area up here, or this is buy, so it would have to drop. If price dropped toward the I don't know what you call it, deep in the money strikes, if you want to call it that. Well, this one's got its price is closed above this strike or above this strike 100% of the time over the past 52 trades. Has it closed 100% of the time forever? I don't know. This strike right here coincides with this strike, which is 4 strikes down. Each strike represents 5 pips wide, so it'd be about 20 pips away. On most days, price is not going to move down there. It's going to stay in this little area here. However, on the days that it does, you know how often it wins or loses. Right here, you can see that. You can see winners here. You can see losers there. Give me a second. Let's look at the next one. By the way, if you have any questions, just let me know. Okay, on this one here, this is a pound yen. I like the pound yen because, man, that sucker just moves. That and the pound New Zealand, which you can't trade a binary on. But the pound yen, man, it will move. Prices, if you've never looked at the pricing on a pound yen, take a day and just go compare the pricing on, say, the Euro USD to the pound yen. You're going to see some dramatic differences. The pound yen, oh yeah, Matthew says it's a bull in a china shop. It is, because it moves a lot more. If the euro, I don't know what the actual rate is, but let's say if the euro moves a pip, the pound yen's going to probably move, you know, 1.5 pips or 2 pips, you know, somewhere like that. It moves almost twice as much. So here is something we're looking at here. We're looking at something called a touch mode. Now, what if you don't want to let a binary expire? What if you want to take a profit? Well, we can see that too. And how often does price touch a certain area? Well, we'll talk about OTMs right now. I know that price is going to touch 5 pips down on every one of these signals 91% of the time. Does that mean I want to take that trade? No, it does not. Because if you've been trading binaries for any length of time, you know that a lot of times price will be in between the two strikes, such as, let's see, right now price is at 116.50, whatever, right here. And, you know, the price is 64 where it's right at the money. So just because it touches it 90 whatever % of the time does not mean that that's a good trade to take, because you may not be able to make any money off that. But you do know that it touches that 90% of the time. How often does it touch, you know, the next strike up, or, you know, 10 pips away? Well, it does that 69% of the time. 69% of the time has 11 consecutive winners and 4 consecutive losses. Now, what this means is 69% of the time, it will go down, and let's say price is, let me take a picture. Let's say price is in between these two strikes right here when the price opens. I know that 62%, I know 62% of the time, price is going to go up and at least touch this area up here. At least touch it, not expire, but touch. What did I do with it? Okay, and I know that's going to happen. It's had 4 consecutive losses in a row, which means 4 times in a row maximum, it has not touched that area up there. If you go out even further and want to take like a deep out of the money strike, we'll touch on that. I know that 20 pips out, it touches at 41% of the time. Now, 41% of the time, even though it's below 50, if I'm buying an out of the money trade, I'm not going to pay 50 for it. I may pay 5, I might pay 10 or 20, but I'm not going to pay 50. They lose more often than they win. However, you're risking way less money. And my personal favorites are the really long shots for like, you got trying to buy it for 5, and if it gets up there, it's going to be worth 50. So you risk 5 to make 45. Those are the ones that I like. They don't come along very often, but if you watch it, you just have to get into the habit of watching your charts so that you can train your own brain to look for these things. Let's go on to the next chart. Now, I totally forgot what this one was. Let me look at it for a second. Touch and reverse. Oh, yeah, I like this one too. Touch and reverse H1, which is an hourly chart. The strikes are 10 pips wide. Notice ITM and OTM level 3. Okay, what we're looking at here, now, we've got, hang on a second. I put this up here to do something here. Okay, what we've got here, this one's a little different. You're not going to see all the strikes. However, on a touch and reverse, what this is telling us is if price touches, let's say price opens, and where are we at here? I don't like that picture. Yeah, I'm trying to find an easy one because I only have a few minutes left and it's difficult to show you this, but I'm gonna try to explain it here. Okay, let's just take any candlestick here. What the touch and reverse means, if price opens, let's say price opens here, and it goes up to touch and in the money, how often does it expire below there? For instance, I know that I'm looking at ITM and OTM level 3. Regardless of the way the arrow is pointing, regardless of that, I know that when price touches ITM level 3, or the third level up here, or it touches OTM level 3, or the third OTM level, I know that 66% of the time it's going to reverse off of that and close profitable. I know if it comes all the way up here and touches this, it's going to reverse off of that and close profitable 60% of the time. You know, I don't know that it will. I know that it has the probability is that's what it's done in the past. And if that's what it's done in the past, from a few webinars ago, you remember Newton's law of motion. Anything in motion is going to stay in motion unless it is stopped by an opposing force, and anything at rest is going to stay at rest unless it is moved by an opposing force. Same thing with anything in the market. Whatever has been happening is likely to continue to happen until something big happens. There you go. So I'm not going to talk about anything else about the tool suite today. My whole point on that was to get you to think about probabilities, to get you to go in here and look at your charts. Look at your charts, start looking, start putting horizontal lines on your charts. You know, I don't care what you do. I just want you to spend, I don't know, 15 minutes a day, an hour a day, whatever, 5 minutes a day. Look at your chart, get out a pencil and paper, start writing down statistics. We're going to go do a statistic right now. We're going to do a statistic that says after price closes, and the only way to do that is to skip a bar. After price closes down here, we're going to start counting. Well, when price closes down here, how often does it reverse over the next 1 bar, 2 bars, 3 bars, whatever? Start doing that. I mean, it will be tedious. It will be, it'll take a lot of time. But if you get in the habit of looking at your charts, you're going to come up with win rates that are, I mean, amazing. Even with a 50% win rate, if you know your max consecutive winner versus your max consecutive loss over the history of whatever signal that you're choosing, great. One thing that I want you to look at is something called a bar run. I don't know what it's called. We just gave it the name bar run. Bar run means it just counts the candles. So if I had something called a 4-bar run, then I'm counting 4 consecutive candles. 1, 2, 3, 4. And at the close of that candle, what does the next candle do? If I'm looking at a 5-bar run, I'm just going to count 5 candles. 1, 2, 3, 4, 5. And at the close of the 5th bar, what does the next candle do? That's about the easiest way to start creating your own statistics. And it works. I mean, it's all I use. Statistics and probabilities are all that I use in my trading. So on that note, I'm about done. Do we have any questions? Are there any questions, or are you totally lost? I mean, if you're totally lost, let me know. I'll try to help you out. On here, it's 5-minute bar. You can go up to hourly bars or whatever you want to do. It doesn't matter. What matters is you start looking at statistics. Now, Ryan, you've got the tool suite. Go put it on. Go put it on the bar run and just start looking at it. I'm going to be doing more webinars as we go along about the tool suite, but it won't be connected with Cantor Exchange. It'll just be my own. But just go in here and go into Cantor Exchange and start looking at the bars. Start looking at how often things happen. You can even pull up data, you know, historical trading data, and look at that. Just start looking. Okay, go get me a sip of coffee. Now, without anything else, I will tell you that without any charts or anything, if it depends on where price opens. Okay, if price opens here, this strike above and this strike below, most likely on, you know, on normal days without a bunch of news, price is going to close above here and below here on just about every signal until it starts to, I don't know what happened here, but until it starts to, news comes out, whatever. And because most of your candles are going to be rather boring, you know. The biggest trading time, it starts at 8 a.m. in London, which is like, I don't know, 3 a.m. here, something like that, up until about noon Eastern. But wherever price opens, the best way to view just an average normal day is look at the strike above and strike below and kind of look and say, well, what if I were to put a condor on that or a butterfly? Now, if you know what a condor or a butterfly is, then you know what I'm talking about. You sell this one and buy this one. If you don't, go Google it. I'm not getting into that today. Iron condor, butterfly, and you can also look at something called a straddle. A straddle is a butterfly in reverse. Anyhow, that's about all I got, guys. Statistics will give you more power to do anything that you want to do in trading. And we've got a tool called the Probability Tool Suite. If you want to learn more about it, just send us a message there on Facebook or in here or whatever. And I am done. If you have questions, let me know. If you don't, well, I will see you next week. Now, next week we got. Let me pull it up here. I'm gonna go over what we've got coming up over the next few weeks here. Do not pay attention to this website. Please do not log in yet. It's not ready. This is our new thing. Over the next, I mean, you can go look at it. Just type in traderbotmarketplace.net, N-E-T. And I've got the events listed here. Next week, we are going to, is it next week? Let me look at the calendar. What's November 2? Yeah, that's next week. Next week, we're going to be talking about stacking OTM trades. The week after that, we're going to be talking about picking your expiry is a science, because picking your expiry is, you got to get it proper. You can't just pick any expiry. The week after that, we're going to be talking about my favorite, or one of my favorites, directional versus non-directional trading. Did you know you can trade where you don't even have to put in a direction? So then the next week after that, we're going to be talking more in depth about bar run, the one we talked about today. November the 30th, the diagonal line method. I'm going to go over this real quick here in just a second, but I'll go more in depth on November 30th. Talk about trader psychology, December the 7th and the 21st. We're not going to have one on the 14th. That's a free week for me. And then on the 28th, we're going to probably do a year-end bash. Let's go talk about the diagonal line method here for a second. This is one of my favorite neat little things, and I don't know anybody else that does it. Real quick, let's pretend we've got an expiry right there.